we have been monitoring, and keep monitoring. And when is it ever going to happen? Will there really be a reset in the real estate market? And when, if ever, will that happen so that we can jump into all of those deals? Hello, everyone, and welcome back to Nova Rise, your channel for financial education. So today we have news for you. Hot off the press. So, okay, I know everybody has been waiting for it. Everybody has been trying to get some updates as to what it's going to happen to the market. Should you keep waiting? Will housing prices ever come down? And what should you do while you are preparing for it? So this article came out hot off the press a couple of days ago, and I couldn't wait to create a video so I can share with you the update. So where is it truly heading to? Where are we going to see housing prices going in 2022? So this video is being released in October 2021. You should have ample time, at least a couple of months, to prepare for what's about to come in 2021. Now, bear in mind that, just like everything in life, things happen, things could change, something else could pop up in the market, and whatever we're discussing today in October 2021 could potentially change within a matter of months. So right now, let's take a look at this article, and it's talking about what's truly happening in the market. So things are starting to shift right now, right? So we see more homes coming into the market. If you come to think about it, the building of housing actually slowed down after what happened back in 2008 and 2009. So a lot of the builders were afraid to build excessive inventory. So they have been kind of like hesitant as to pushing more and more new inventory in the market. Some houses were hitting the market, but not at the rate where it used to happen before, right? So when you couple that over a bunch of years, right, we're talking about a decade worth of waiting, and all of a sudden, combined with low rates, millennials entering the market because now they're mostly in their 30s and they're in a position where they can actually afford to buy a house because now they don't have to be present in the office. They have the option to work from pretty much anywhere around the world. And why should they be forced to stay in big cities when they can actually move out further out to the suburbs where the cost of living is a lot more affordable? So that's where the shift is referring to. And in addition to that, now at this point in time, October 2021, we're seeing more houses coming onto the market because right before the pandemic, everybody was staying put. And then when the Fed lowered the rates, everybody jumped into the market. So that demand was actually there and it kept on increasing more and more people wanted to get a hold of houses, but there weren't many available. So the builders, all of a sudden woke up and say, you know what, the demand is there and this is the real demand. No one is flipping contracts. Some of you guys call it wholesaling. These are actual homeowners wanting to buy houses so that they can move in with their families and just build their lives together, right? So a lot of them started building. Of course, that there have been some issues with lumber, a lot of supply chain issues as well that happened that sort of like slowed down the process of the house building. Now that we're hitting the end of 2021, we're seeing more of those houses coming into the market. So there has been a slow decline on the number of bidding wars. Why? Because we're seeing more houses available in the market, so people have more to choose from. So it's the law of demand and supply, right? So the more demand and the more supply available, the prices are going to start coming down. But if there's a lot of demand and not enough supply, in this case, we're talking about the supply and the inventory of the houses, then obviously there's going to be an increase in prices because only the ones that could afford it are the ones who are going to be the winner, right? But now this article is saying that even though those circumstances or those facts are coming into play, you should not celebrate beforehand, right? Because it doesn't really mean that the bubble, it's going to burst, right? Because what it's saying here is that what's going to happen is that there will be a slowdown. However, prices are expecting to start stabilizing, so to speak, right? So if you pay attention to what this paragraph is saying right here, so Zillow is actually forecasting an increase, an appreciation in used home values from now all the way to 2022. The increase is expected to be at 11.7%. Now, if you're comparing 11.7% from 2021 to 2022, and you compare that to 2020 heading towards 2021, you're going to see that the increase in housing prices last year was actually higher, and it was at 17.7%. So 17.7%, 11.7%. Yes, there has been a small decline, but let's face it, it's not something that is really dramatic compared to what happened, back in 2008, where like literally the market just dropped. Yes, there's been a slowdown because once again, we have more inventory hitting the market, but it doesn't necessarily mean that the bubble is bursting. And if we're going to add inflation to the entire equation, let's come to think of it, right? Yes, the housing prices are adjusting, are slowing down, but can you really keep up with the cost of inflation at 11.7%, right? You can't, because so far I haven't heard of anybody out there who have had their salary increase by 11.7%, right? So if you're wondering, what do you mean by a salary increase by 11%? The cost of living keeps going up. And we know that already by looking at the inflation rate. Now, I've mentioned before that in order for inflation to be healthy in the market, the acceptable inflation rate, according to the Federal Reserve Board, right here on this website, is about 2% or a bit below. But now, if we were to pay attention to the numbers from 2021, you will look at this table right here, and it's not looking pretty. So inflation was at 1.4% in January of this year, consider okay. February 1.7, but then look at what happens in March, 2.6. This was around the time where, we talked about the stimulus check and like more printing money and yada yada, you name it. And now inflation, it's picking up. Now in April, we're talking about a 4.2. Remember, the Federal Reserve said that a healthy range was 2%. But then all of a sudden here, we're looking at 4.2, 5%, 5.4, and then 5.4 again, and then 5.3, and then we're closing in September with 5.4. So assuming that you are in one of those greatest job out there, and your boss is so great and your company is so great that they decided to increase your salary by 5.4% so that you can keep up with inflation, that's still not enough for you to, cover or to even address the increase in housing prices at an 11.7%, right? And it says it right here in the article. Even though there's a strong labor market, most workers won't get anything close to an 11% raise next year, which means that, hey, even though there's more inventory hitting the market, there's still a slight chance that you might not be able to afford that housing, right? So, and once again, there's a caveat right here on this article. Silux explains that home price appreciation is sometimes difficult to forecast, but we expect the home price growth to slow down from historic heights, right? Again, yes, we experienced a big increase right here. If you look at this graph, so we have January 2019, and then we're talking about 2020. This is right about the time where, the pandemic started hitting the US, and then the lockdown started happening. Everybody was sitting still because nobody knew what was going on. Do you go back to work? Should you sell your house? Should I sell it and then wind up not winning a bidding war? Am I going to go back to being a renter? So there was a lot of uncertainty. There was a lot of unknowns. But once the millennials started seeing the flexibility of working from home, they started wondering, why do I need to pay, an overly expensive rent in LA or in New York City when I can actually get a lot more housing, get a nice yard, and then move my family out there and build a life together? And that's when the demand started increasing. But you know what? The housing market couldn't keep up. And in order to sort of like keep up or, survival of the fittest, the prices just kept going up and everybody started bidding the prices all the way up. Once again, now that we're looking up this graph, I actually want to make a point. I don't make up this information because I've seen in some comments where people have been saying, well, about a year ago, you mentioned something about not buying, staying still. Then a couple of months, you're saying that you should invest in the real estate market. Look, I don't make up the data. I have no control over people's behavior. I'm just simply relaying the information that I see based on the information that I find right here. And what I want to do here is just simply communicate that information to you so that you can use that to your advantage and make the best decision as possible. Yes, I've mentioned in prior videos that you should hold still because nobody knew what was going on. Everyone was kind of like in standby. And then as soon as I found out about what was happening in the market, I also created another video giving you the updates and explaining you why you should should go ahead and buy before housing prices continue to increase a lot more and you're just, kicked out of the game because you couldn't keep up with the rising cost of those properties. So once again, the same thing I'm doing here. I'm just simply relaying that information, everything that I find here. But fear not, this is just one side of the coin. This is what Zillow expecting to see. But if you scroll all the way down, you will see that this is just one forecast, right? So this is a forecast done by Zillow and is very bullish. For those who are brand new, bullish means overly excited, overly aggressive. Think about a bull charging at you, right? So it's coming at full force with the highest expectations of what the market is going to happen. But there are some other researchers out there, like for example, CoreLogic, it's only expecting a jump in 2.2% in US housing prices. And there's another company out there, Jumbers Real Estate Consulting and Freddie Mac. They are forecasting a home price growth somewhere between 4 and 5.3% respectively. So again, always take a look at everything with a grain of salt. If you want to find out more about the report, just simply, access this article, click on CoreLogic, click on Freddie Mac so you can find out more. And if you want to know more about the insights as to where Zillow got this information, there's also the Zillow forecast model, which is this article right here. You can just click on it and learn more about it. So the forecast that they're referring to is housing prices between the period of August 2021 and August 2022. And once again, we already talked about the 11.7% increase that they're expecting for next year versus, the 19.9 from December 2020. And, feel free to scroll down the entire article. It will be for your benefit. And same thing for the article from CoreLogic. They're providing all the information up here where you can actually take a look at it and use that information to your benefit. Same thing with whatever it's on the Freddie Mac website. So once again, absorb all of that information so you can make an intelligent decision. And speaking of intelligent decisions, check out this video right here that's going to help you complement everything you just learned today. And until then, take care. Bye-bye.